Good evening, everybody. This is Carlos, CEO of GAR Capital, and with me joining me tonight is Anthony Acosta, CEO of Liam Capital LLC. What's going on, Anthony?
Good evening, Carlos. Good evening, everyone. Hope everyone's doing well. Pretty volatile week so far, and more to come tomorrow and Friday.
Yeah, absolutely, man. It seems like the one thing that's been kind of like the base mark of everything has been Trump. Everyone is getting trumped
Yeah,
one way or another. Whether it's the
exactly.
dollar's too expensive and the dollar sinks, to Yellen's is bullish and the dollar rises. So, and the
Yeah,
beige book too. So it's kind of like pick your poison, how you want to go, left or right. And I mean, it's just been really, really rough this January. I mean, I think it's kind of the what's going to happen with 2017 is just Twitter fingers is going to probably mess up markets here and there.
yeah, exactly. That's pretty much what it's going to come down to. I mean, we're in for a big change, I think, for the market. So we got to play accordingly. Risk management always key,
Big time.
and yeah, keep
1%,
moving.
2%. Today
Exactly.
we had some inflationary data. Consumer price index did meet expectations. Core consumer price index. The big thing was the Canadian dollar. BOC polos just kind of nuked the Canadian dollar all around and taking WTI oil with it.
Oh
Want to take
yeah,
a look at dollar Canadian dollar, and you could see it. I mean, how much was it? At today's mark was around 200 pips for the day.
yeah, big move.
200 what? 180, 180 pips move to the upside. Now the
Well,
thing is
his
that
dovish comments.
yeah, these kind
Yeah,
of
go ahead, Carlos.
these kind of moves don't last, as we saw with the gap on Sunday with the pound, and then it went right back up.
Yeah,
These
that was
kind of
quick.
big moves don't last for the most part. I mean, you can already see in on the hourly chart that it's already hitting resistance. I don't think it's going to stay above that. If it breaks 133, fine, you could be bullish, but for the most part, I don't believe it's going to hit it.
Yeah, exactly.
So on the 4 hour chart, we're looking here, same deal. We can see it. I mean, if it does break 133, maybe we get to the upside. But on the 4 hour chart, it's still bearish for the most part. If we can get a comparison here with U.S. oil, if we can see
Yep.
the correlation.
133 is a line in the sand pretty much. I
Yeah,
mean, that's the key resistance to reject or break.
yeah, you can definitely see the divergence here on the oil market. So WTI hitting the 50 handle, and also dollar Canadian dollar going to the upside. The inverse correlation is right there, guys. You can actually see it moving from the 17th, actually this earlier this week on. Oil markets have been crazy, just going back and forth. That it wants 54 and it doesn't hit 54. So let's take a look. Right now it's trading at 51.45 off the lows of the 50 handle. I think it was around 50.89 at its lowest point. We were at yesterday around 52.60, and it really wanted 54. It was going up to 54 on the 17th, but big 3%, I think 2 to 3% moves on the daily. Too much supply, not enough supply, OPEC, Saudis. I mean, pick your headline and it's going to pump and dump the market.
Yeah, it's coming from everywhere.
Yeah, so you got to be careful out here, guys. Whoever's trading oil, but keep in mind with dollar Canadian dollar, I do expect oil to come back up to around 52.60, which looks like around the path of range here is that it broke around 52.12. I do believe we're going to get back to that mark by tomorrow, and then it'll take Canadian dollar with it as it'll be around the oversold area.
Yeah, I agree.
What other charts were you looking at this week?
Basically, I was looking at oil, USD, CAD. We've checked them out already. If you want to pull up maybe the dollar index,
Yep, let's go. Let's fill it up.
check out the dollar and see. That's another one. Everything's, I mean, we have some pullback in the dollar, but for the most part, it's range bound. I mean, the long-term view still remains the same. Some pullback, some headlines.
All right here
If you
is
could pull
yellen. All right here
pull
is
up
Trump.
the exactly exactly.
That's
You could pull up the
exactly where
four
we
hour
are.
and the daily.
4 hour here, range bound as well.
Yeah, so I would like to see a move back above 102.60. What is this, a daily? Yeah, the daily. I would like to see a move back above 10, where are we? 102.60, just to
102.60,
have
I agree.
confidence again.
If we get
Yeah, and
102.16, that looks like a little bit of a bounce where we can still be bullish.
exactly. So, and then of course, 103.60 is the top, so break above that, and we're going to fresh new highs. That's what I'm looking for. And to the
Mhm.
downside, I just want to keep an eye on the 100 support, the 100 level, and the 99.50 level.
100 will be the
Um,
psychological level that if it's broken, definitely we can get
exactly.
a nice squeeze to the downside.
Exactly, and with the possible break for that, we'll probably have, well, like you call it, an impulse move. So
Hmm.
it'll drop pretty fast, and we trade it accordingly. I mean, long-term view is bullish, but we can also hedge out positions, shorting the dollar after that because it would be probably a significant move down, maybe another full point, which is down to 99. So that's just a level I want to watch. I want to keep in mind there, see how it plays out. We got ECB tomorrow morning.
Let's go take
And
euro
then of
dollar.
course Trump. So yeah, exactly. So let's see how this all. Yeah, check it out, euro dollar. See how this all plays
Still
out.
bearish a little bit on the daily, 106.38. If you look at a 4 hour chart, a little bullish as well. So it depends on your horizon. We're short on the euro dollar, especially with Draghi going to be a little more dovish, is what we're expecting. I'm expecting a little more talks.
Yeah, it should be.
But again,
Hmm.
how long can Germany prop up the euro and more Brexit talks with
Yeah, right.
the British leaving? I mean, pick your poison here. I would say what 107.50 would be the top here if it's
Yeah,
broken. That's our stop loss of 107.50 right over
I
here.
think so.
Yeah, 107.50.
107.50 seems, seems reasonable.
Yeah,
Uh,
if it breaks
to,
there, then we would expect
exactly.
the dollar index to fall a little bit.
Yeah,
We would need it to break around what 99.50 to get around that high. I mean, you're talking about a 100 pip move from right now.
yeah,
So that's what we're looking at. Let's take a look at the chart for, I mean, the calendar for the week, rest of the week. We also have ECB 8:30 in the morning, so we got to make sure we're on top of that. Crude oil inventories was moved one day due to Martin Luther King Day on Monday. And we also have Chinese GDP, so that should definitely affect the Aussie.
oh yes.
So also Janet Yellen is speaking tomorrow. So more Yellen, more movement. So we have
Oh
the bid
yeah, we
rate.
should be in for it.
Definitely. So definitely big moves on Thursday tomorrow. And then Friday we're going to end up with retail sales for Great Britain, and then we have Trump talking. So prepare on Friday to speak. And then we have the Canadian Consumer Price Index. I think if they do miss, that's going to even be more of a reason for the BOC to be more dovish and maybe talk about rate cuts. But they've been talking rate cuts for a while, even when oil was around $29 a barrel. I think
Yep.
it takes a lot more for them to cut rates than anything else because they're at 0.5%.
Well, Governor Polo said I read that he said that 135 is fair value, not 130. So so who knows what
He's he's just scared about the Trump issue with trade.
exactly
That's kind of the main
with
thing.
trade. Yeah.
You want to take a look at gold real quick as our last chart?
Yeah, I was just gonna tell you, pull up gold, check that out. I mean, right off the bat,
1200
1200,
psychological level.
1200. Yeah, yeah, that's it. 1200. Pull it up on the daily, and I think above or below that, all the markets correlate. Gold, oil, dollar. We all
Also,
correlate. All the assets correlate
also
together.
yields.
So 1200. Yeah, exactly. So 1200. I mean, dollar index. What is it? 100. Gold is 120. I mean, 1200. So we have all these
Here, I'll compare.
psychological levels upon us now. So, we have to, whichever way it breaks is the way we play out. So let's see how it all forms together after the ECB and after Trump. So beginning of next week, we should have a new direction or the same direction, but we should have a breakout in one way or another.
Let me
Um,
go ahead and
12,
see if I can compare the 10-year bond yield.
yeah, it all
Okay.
correlates together.
So we got, okay, so we also missing WTI. This is considered the Trump trade, the reflation trade. That's what it's called now.
Reflation
According to
trade.
everybody, it's the reflation trade. So if you could see here, we're going to take a photo of this for the Instagram as well. We got the dollar index around in red, moved up a little bit. This is a daily chart, so let's go ahead and move up to a 4 hour chart. Okay, you can see the zigzag lines here in the 4 hour. Okay, definitely here the hour, and you can see here on dollar yen. Dollar yen is up on the hourly chart. No, excuse me, is that nope? That's the gold. So gold has been definitely the big winner, and then you can see the divergence here on the orange line, which would be the Dow. Dow has been it snipped 20,000, but since then it's been dropping.
Yeah.
We also got the dollar index, which has been pretty correlated with the Dow Jones as well. 10-year yields have gone up a little bit, which has been the safe haven. If bond yields do fall, that means more people are buying bonds because they're they're inverse, excuse me, inverse to price and yield. The green line will be dollar yen, as you can see, is dropping a little, rising a little bit. That goes up with the yields, and then you also have oil. So if oil drops, and you also have the 10-year bond dropping, you can see that we're having a safe haven pull with gold rising. But as of
Hmm.
right now, what can you make of this chart? I mean, the only thing I see is that a little more risk is going up, meaning dollar yen is going up a little bit, yields are going up a little bit, and gold is going down a little bit.
Yeah,
So
pretty
kind of
much.
like a turn to more of a risk off. What do you think?
Yeah, that's what I see too. I agree, definitely. Um, yeah, so let's see how this plays out. Watch gold. Risk management is always key with all trades, as we all know. Um, that's it with gold. Check out, you can pull up USD JPY chart.
Yeah, I'll bring that up right now. Give me a second. So we're gonna go ahead and close all this.
Yeah, gold is always a good hedge to have.
Absolutely.
Um, just watch the 1200 level up above it with a bounce or below it, but it's always good to have some type of gold, some exposure to gold.
Yeah, yeah. As your hedge. So right here at the bottom at 112.60 was the bottom, I guess. Didn't really get to rally to the downside as we had a little more of the profit taking on the
Pretty
yen
big move.
buyers, and we jumped up around what 200 pips for the day. Helped out by Yellen. Yellen alone boosted it up about 150 pips.
Yeah, it was pretty much Yellen. She came in pretty hawkish, talking about monetary policy,
Yep.
saying she wanted to see, what did she say, three rate hikes,
Three rate hikes for the
couple
year.
other comments. Yeah, a couple other comments that she said, and USD JPY took off flying. And based off of the move from that bottom at 112 and change, I mean, it looks good. It looks right to call it a bottom. So we have to see a breakout above 115.5, but it looks good to call it a bottom. I mean, that's a pretty big move, and you want to see that. You want to see that capitulation, if you want to
Yep.
call it
Yeah.
that. Everyone get out and everyone get back in, and now we push up.
Yeah, right here you're
So
getting
that's
the
that's good.
algos to push down on Trump, and you have the algos coming back here with Yellen. So
Exactly.
I mean, you just got to be very, very careful, guys. Anything from now on, I would go half position just until we get some stability.
Yeah, that's actually a good idea. Until we get stability, until we have a clear direction. I mean, because any single day, a tweet can change everything. It can change the whole day around. One
That's
tweet. So
that's the world we live in now. So we're trading right now
exactly.
114.70, dollar CAD at 132.62, and pound dollar around 122.73 as the gains have been removed on pound dollars. You could see again, this was the gap up. This was the gap down, gap up past, back down to Yellen. I mean,
Exactly.
zigzag markets. I mean, even if you're a scalper, you're still having risk because these moves are so
Yep.
wide. So you just got to be really, really careful. That's the main thing. Just be very careful. If you guys have any questions, make sure to email us. We're also always on the chat. And I guess tomorrow morning, 7:30 a.m., we're gonna get the rate statement on the ECB, and then we're gonna have the ECB conference 8:30. Draghi is always good for something, at least good for a laugh. So
Oh yes, always.
yeah, definitely we're definitely looking into it. So if anything, you guys have any questions, make sure to email us and talk to us in the chat, and we'll go from there. Let's go ahead and end the week strong. It's been a crazy month, and we always bounce back, guys. That's the most important thing.
Always, exactly.
All right, Anthony, man, appreciate your time, and we'll go from there, buddy.
Always. Everyone have a good night. Let's knock this week out. Everyone have a good night.
Cool. Thanks.